According to the regulator, it is essential to integrate individuals from the non-monetary economy into the monetary economy by fostering partnerships that enable financial institutions to reach underserved communities. This can be achieved through capacity building.
You need to identify partners who have the capacity to reach the last mile, not even the supervised financial institutions, the banks, the credit institutions, have the capacity to get the last mile because maybe they were not designed to get into that. Their business models do not allow them. But we have some institutions that are emerging, the fintechs, the microfinance institutions. We have the village savings loans associations. So how can we tier? How can the formal financial institutions tier with them? So to work so that they wholesale their credits to these institutions to retail to the last mile. And then these other institutions who have the capacity to go the last mile, they also mobilize deposits, savings from the last mile and wholesale these savings to the, to tier 1 and tier 2 and tier 3 institutions.
Several factors still affect growth of formal financial services, which are limited in terms of availability and accessibility. This ends up serving only 14% of Ugandans.
The formal financial services are limited. They are still limited in terms of availability and accessibility. The commercial banks and all of their relatives, these credit institutions and the micro deposit taking institutions, they are only serving 14% of Ugandans. So 86% have to go to other sources.
The government recognizes that high interest rates due to borrower traceability and bookkeeping issues have hindered microfinance growth. However, it is optimistic that addressing these challenges will reduce lending rates and boost microfinance uptake.
Interest rates, they have drivers. They are drivers of interest rates. You'll find one of them is the cost of money itself, because when you don't have enough longer term money, like a pension schemes accumulating money in big amounts, the banks are still relying on demand deposits. Your money you put in the bank, which you can go back in the afternoon and withdraw. So that one you can't easily lend it. As long as the savings are low, you can't have interest rates reducing because the cost of money is high.
Rachel Nabisubi, NTV Business.